Hi, Niro Pillay here from Investment Rise, and today I want to share with you a market update. What's been happening in the Sydney market in the 6 months leading up to the end of December 2016. Now, first of all, I've got to tell you, most of you are not going to like what I'm about to share because the data and the facts, unfortunately, are showing right now that there's almost two types of investors in Sydney. The ones who are going to make money and the ones who aren't. Now, why is that? Well, let's first look at the data. I've been saying it for a long time that the Sydney market is oversupplied, especially with apartments, and a lot of areas I expect to come back a bit. And although a lot of people have disagreed with me, the data is now showing it. So let's have a look at what's happened with the apartment market in certain key areas of Sydney. First of all, the southwest of Sydney. If you can see that, it says it's dropped minus 3.3%. Okay, that's not a huge drop, but it's still a drop in value. What about the west of Sydney? Apartment market has dropped 1.3%. And the Canterbury Bankstown area or the inner west of Sydney has dropped 0.4%, so negative 0.4% growth. Okay, so these are not huge drops in value, I get that, because if you look at the last 4 years, the apartment market in these areas has had on average just over 60% growth over the last 4 years. Phenomenal growth. So when you've gone up roughly 60% and then come back 0.4 or even 3.3, it's not a crash. But if you are someone looking to get into the apartment market as an investor, you need to understand that you're going to lose money at least in the next few years, because these growth rates, these negative growth rates, are only going to continue because we haven't yet seen the full extent of the oversupply that's coming online. But then you might say, but Niro, hold on. I've read the reports that say that the Sydney apartment market over the last 6 months to December 2016, so the end of December, grew by over 6%, so positive 6.2%. How does that work? How can we have negative growth here, but then all of Sydney has gone up by 6.2%? And this is what I was saying, why there are some investors who are going to make money and some investors are going to lose money. Who are the people who are going to make money? It's not fair, you're not going to like what I'm going to say, but it is going to be the wealthy. The people who can afford your $800,000 plus apartments, because the reason why the Sydney, overall, all of Sydney, the growth rate is positive in the apartment market, because it's been driven by the apartments in sort of the northern beaches or the northern suburbs of Sydney. But the high-end market, we're talking $800,000 million plus points. Now, if you can afford an apartment at that kind of price point and handle the shortfall, because there'll be a rental shortfall, in other words, the rent won't cash flow the investments, you've got to fund it yourself. If you can handle that and you've got that kind of money, then that's fine. But for most people, that's not really an ideal investment. Okay, the mortgage is massive, and that's not really what you want to look at. So if you're looking at price points of $650,000 or less, you're going to be looking in areas that are unfortunately going backwards in value. And this is why the average investor who's got 70 grand, 100 grand, maybe even $150,000, even up to $200,000 in the bank with a certain borrowing capacity, who can only afford, $700,000 or less, is going to have to look in areas where that price point is available. But unfortunately, those areas with that kind of price point, the decline has already started and it's only going to get worse. So if that's what you can afford, you need to look at other areas outside of Sydney. Stay away from the apartment market. Look at where there's land available. We can get a house, at least a townhouse, or something with land on it that's growing in value in growth markets. All right, and then that's how you're going to make your money work hard for you. Be careful when you look at the data. If you look at generic data like Sydney saying the apartment market has grown by 6% leading to December 31, 2016, and that makes Sydney a great investment, you've got to drill down into suburb by suburb, area by area, and you will find that it is unfortunately the wealthy, the people who've got more money than most, who are able to buy apartments at higher price points, and that's driving up all of Sydney. But the average investor is on a path to lose money if they enter the apartment market in 2017. That's what the data says. It's not what I'm saying is fair. It's right. But if you're the average investor, you've now got to think more strategically. You've got to look outside of Sydney, outside of Melbourne, outside of the apartment market, and start looking at growth markets. It may not be fair, but that's the way it is. So let me know what you think in the comments fields below. What do you think is going to happen with the apartment market in these areas that have already started declining? Do you think it's going to keep going down? And if so, where do you think you should be investing next? I'd love to hear from you. Bye for now.